This single rule changes everything. If you borrow money, even millions of dollars, the IRS does not consider it income. Why? Because borrowed money must be paid back. Legally, it's debt, not earnings. And because it's debt, it doesn't trigger taxes. This rule exists to keep the economy alive. Businesses borrow. Home buyers borrow. Banks lend. If loans were taxed as income, the entire system would collapse. So the rule stays. And millionaires build their entire financial strategy around it. Here's the strategy in simple words. They don't sell assets. They borrow against them. When an average person needs money, they work more hours or sell something they own. When a wealthy person needs money, they use their assets as leverage. Selling an asset creates a taxable event. Borrowing against an asset does not. Let's say someone owns stocks, real estate, or a business. Over time, these assets grow in value. Instead of selling them and paying taxes, the wealthy go to banks and say, "Use my asset as collateral and give me a loan." Banks love collateral. It lowers their risk, so they lend the money. The moment that loan is approved, the person receives cash, and that cash is completely tax-free. No income was earned, no asset was sold. The IRS cannot touch it. This is why the rich don't rush to sell their investments. Selling creates taxes. Borrowing creates flexibility. Let's make this very clear with an example. Imagine someone owns $5 million worth of stocks. Those stocks grow year after year. If that person sells $500,000 worth of stock, capital gains tax applies immediately. A large chunk goes straight to taxes. But instead, they go to a bank. The bank offers a loan of $500,000, using the stock portfolio as collateral. That money is not income. It's not taxable. It's legal. The person uses the money while their stocks continue to grow. Later, they refinance the loan or pay it back using future gains. This is why you sometimes hear shocking headlines about billionaires paying less tax than teachers or employees. It's not fraud. It's not evasion. It's understanding how the system works. So why doesn't the IRS stop this? Because it can't. If borrowing were taxed as income, businesses would stop expanding. Home ownership would decline. Banks would freeze lending. Entire economies would slow down or crash. Credit is the engine of modern finance, and the IRS has no power to change that without breaking the system itself. The IRS can tax income, can tax profits, it can tax sales. But it cannot tax borrowing. Millionaires don't fight the system. They don't complain about taxes. They simply position themselves where taxes don't apply. But here's something very important that rarely gets mentioned. This strategy is powerful, but it's not magic. Borrowing against assets carries risk. Asset values can fall. Interest rates can rise. Poor planning can destroy wealth quickly. This is why rich people don't borrow recklessly. They don't borrow just to look rich. They borrow to protect and grow assets. The difference isn't money, it's discipline. Poor chase income. The middle class try to save income. The wealthy focus on owning assets. Once assets are built, money becomes easier, cheaper, and more controllable. The IRS is not powerless because the rich cheat. The IRS is powerless because the rich understand the rules better than everyone else. And the moment you start learning those rules, your future changes. If you want more knowledge like this, real explanations, not get-rich-quick promises, subscribe and stay curious. The goal isn't to avoid responsibility. The goal is to understand the system so you can move forward intelligently. Imagine working harder every year, earning more money, and somehow watching a bigger portion of it disappear to taxes. Now imagine someone else, someone who owns businesses, stocks, and properties, legally paying far less tax. Even while their wealth grows into the millions. This isn't because they're smarter or luckier. It's because they understand a rule inside the tax system that most people never learn. The IRS is powerful. It can audit, penalize, and collect billions every year. But there's one area where it has no authority at all. And once you understand this, you'll realize why millionaires keep getting richer, while average people stay stuck in the same cycle. Most people believe the IRS taxes money. It sounds logical, but it's not true. The IRS doesn't tax money. It taxes income. If you earn a salary, that's income. If your business makes profit, that's income. If you sell something for more than you paid for it, that profit is income. Income is what gets taxed. But wealth itself is not taxed. More importantly, borrowed money is not taxed.